Cheers to that Sunday night feeling before the start of a new trading week retail trading team. This is your routine briefing. Let's jump right into our warm-up review. Look at what worked last week. Just kind of review the last briefing and as we prepare to start the upcoming week here. Let me just make sure my sound's working. Okay, so this warm-up document is available in the description. It's the one that I talk about every video. I fill this out by 10:30 Eastern every day. So these briefings are going to not be quite up to the minute, and as we know, it only takes a minute for things to change in the market, and this just kind of keeps everything going in the morning there. So yeah, so the first thing I want to discuss is the classic gap and go that we saw in the chart. So if you look at this highlight here, um, just looking at the charts, my assumption was that 3900, 3945, those were the two key areas in ES, and it would be all about that reaction to the gap at that 45 level or the triangle support a little bit below 3900. And as we saw, we went to the gap, consolidated for a little bit, and then exploded away from it. Like I said, that's called a classic gap and go. And it really set up what I thought was going to be a overly bullish week. And in fact, this is one of the few times that my assumption has completely been changed by just reviewing everything, and I'm going to get more into it here. So the first thing I just want to point out, and you'll see this when we go to our macro chart, is the fact that we have contraction in the pivots. So keep in mind that last week's trend was technically down. We did close below where we opened, and a contracting pivots. Again, this is Order Flow Lab study that I look at. That's also, you can find out more about that in the description. That's suggesting we actually should trade to the downside. And specifically, if you look at this document, you can look at this comment. I give some specific levels of what I'm looking for. The first being the 30-minute close here below that 92 level. And again, just go to the document if you want to see those levels. That's the first thing I'm looking at. And we do have the pivot confluence. So again, I'm going to show you that in a chart in just a second here, but just keep that in mind as we move forward. So going back to that 20 level on the VIX, where do we close on Friday? Right at about 1985. Futures are down about 3 points. To me, that's kind of saying that VIX is back around 20, obviously extrapolating. Yet we're still trying to decide what we want to do around this 20 level. And when we look at the volatility chart, I'll point out what I'm seeing for now. So this is the warm up from Friday. It'll be current tomorrow at 10:30. The two things that are current up to date for tonight are that weekly pivot range, that weekly trade that I'm looking at, and these levels are the important levels for tomorrow. So I just want to remind you every day by 10:30, the most important takeaways that I'm using to plan my trading day are in this document. So let's move on to the macro chart. And I keep hesitating. I meant to restart the computer and hide this taskbar. So since we're already going, I'm just going to go ahead and hide it in real time here. I can figure out how to do that. Okay. Didn't work. Okay, you know what? We're just gonna ride with this, so I don't spend 10 minutes trying to do this in the middle of our briefing. So that's that document. I'm gonna move into the macro chart. Okay. Get a glimpse into my current desktop. All right. So macro chart. What I'm saying that we have that WDP confluence is what you're seeing in this zone here. I'm going to draw a little ellipse. This may become what Order Flow Labs calls an elbow zone. I'm not going to get too much into that. If you are more interested, I highly recommend that you at least try out a month, but just kind of circling what's going on there. That's kind of building what I see as a sign of supply. And we'll see if that follows through, but that's what I'm talking about when I say we have the confluence. We do have these pivots, which is our high probability when we do have the confluence that matches that contraction and therefore down assumption. So we're going to be watching that real closely as the week goes on. Other thing I want to point out is where do we stop? Right at that POC. The high was right near that POC supply zone, and it's going to be supply all the way on up to at least 4020, I think. So that's really, for me, the major uh, pivot, if you will, for the week. Outside of our other many pivots, that POC is if you look at the 365-day volume profile, that's where the majority of the volume and the most quote unquote fair price of the auction is currently sitting at. So we'll be watching that as the week goes forward. And finally, just pointing out the volume from Friday. It was slightly above average, maybe at about average, yet it was below the relative volume from the prior 2 days. So we had high relative volume prior to down days, one of which was a fairly large down candle. The other one is a decently sized candle as well. From 2 down days, one of which was a downward consolidation. That's where we had the high relative volume. And even on Friday with OPEX and everything, we didn't get to either of those two levels. So I don't really take too much from that volume component, but just kind of give you the full picture on what's going on in the macro chart here. Yet it's still really all about what happens if and when we finally address the trend line. It's that red trend line. You can see we now have a supply zone from last week's candle from 40.20 to about 39.90. Again, that is that POC area and all the way up through that. That's kind of the primary supply zone that I'll be looking at this entire week. And if we want to go to a shorter time frame and kind of look at that TPO 30-minute chart, this for me is the chart of the day. And the reason it's the chart of the day is this is a chart taking into account what we saw with the weekly pivots that convinced me that perhaps it is not going to be as bullish of a week as first expected. So I'm watching the 622 time frame real closely. Once we do get that stroke of 6:30, I'm actually going to initiate that first half of my futures position, targeting that WDP trade from the document. So I'm watching that closely out of the corner of my eye, and hopefully we'll get that on, assuming we don't get anything above 39.92 in the next 8 minutes or so. So anyways, back to this chart, back to the all-important chessboard. What do you see? You actually see that the bulk of last week's distribution, so not including this big day here, but including the day after and all the way up until even Friday, the majority of the volume balance, if you will, is really still down at about that prior week value area low, 39.35 to 39.25. This can change as we build volume in the overnight and tomorrow. But for me, that was the first red flag, because it does seem that the distribution, the majority of the volume is still near that lower edge of balance, and around that 39.35 to 39.25 area. Do I think that we get all the way back down there this week? Not necessarily. Those pivots are pretty tight. I would think that'd be near the outer edges of it. Yet I'm definitely watching for that consolidation. Maybe as high as that 40.20 area, and maybe even as high as that 40.35. Yet I do think the supply holds, and that we will likely rotate between maybe these upper extremes. And again, I'm taking a short, expecting us to perhaps not even hold above 39.92. Yet even if we do, it's gonna. I think we're gonna see some kind of ping pong, if you will, between the supply and the demand. I would be surprised if there's any extended move below that poor low if we do go clean it up. So like I said, I'm thinking that we're going to see a range from about, we'll say 39.90, that POC, down to maybe that monthly POC just for the month of January itself at about 39.20, and maybe as low as 38.90. We'll see. Upside targets, like I said, remains that trend line. Yet the TPO to me is saying there's a lot to clean up below. You've got some ugliness. You got 4 singles from the other day. As we move to this next chart here, the volume by price chart, you'll see kind of what I mean in the prior week profile itself. Just one more thing on this chart. So that first 15-minute candle did produce one of those significant open drive zones on Friday, and that level is about 39.10 to 39.30. So if we draw a little, I'm not even going to draw a rectangle. You can see it's really from about slightly below that monthly POC to slightly below that prior week value area low. Again, that's the first region of what I think will be strong supply if we do see some type of extended pullback this week. So moving on to that volume by price chart, I think it's just really important to look at the profile. Is an ugly weekly profile. You have distributions on the higher end near that ultimately the POC of the week at about 40.10 to 40.15, and then you have another distribution down by what is the monthly POC and lower edge of last week from that level we are talking about earlier, 39.10, let's say, to 39.30, and there's a lot of ugliness in between. I think plenty of room for chop and consolidation to build out volume, maybe fix this auction up a little bit before we decide to have an extended move one way or another. That double distribution was a highlight of last week's debrief, and you can see we are just kind of, last Thursday, was it Thursday night debrief. You can see we did move higher into that, and we're still filling it out. It's really interesting because we've moved from those oversold levels near the bottom of last week's move directly into what are, I think, pretty darn overbought levels relative to the past few months. And it was a really significant squeeze in terms of raw price action Friday, and that is being reflected in the RSI. I talked about that RSI reset in the last debrief, and noted that it was really less about the RSI and more about what happened at this 39.45 area. I'm just going to draw another arrow where you can see that red horizontal histogram is a bunch of what are now trapped sellers. We'll see if they're still there and return to the levels. Very possible that resulted in the squeeze. But you had a lot of short positions that ultimately got unwound on Friday, and that's probably contributed to the fact that we had that 3 standard deviation move. And we also exceeded on Friday. For the second time in the week, we exceeded that ATR. So ATR is average to range. Really beyond that, we exceeded the expected move. We had another outlier day, a 3 standard deviation day. Again, on Friday, we had 2 3 standard deviation days last week. And if you want to do the math around that, it's a lot of fun. Quite an outlier week. Price did not really go anywhere, yet the intraday moves were extreme. We had 3 standard deviation outlier moves in the same week last week without price going anywhere, and that can sometimes be the fun of 0DT. So if we want to look at what happened with volatility, I mentioned VIX back near 20 and the significance of that level. So if we look at volatility, I'm just going to go back just a little bit here because we have the new day's pivots on the chart. I want to go back to Friday's pivots. Okay, so you can see we're back at Friday's pivots, and what happened on Friday. I talked about that 2165 level. That was the weekly pivot. In the last debrief, I said that what happened around that pivot would likely be important and lead to the day's trend. I did not expect it to be a 3 standard deviation move, and my P&L on Friday reflects that. Yet we had that rejection at the pivot, and it followed through. The head and shoulders mentioned, if we zoom out just a little bit, the head and shoulders that we mentioned followed through, and we saw the extension down to 6B, which is, think of that as the outer edge of the I'm not even sure what you call it. Sorry, my dog's barking in the background. I guess value. I just don't think of the VIX in terms of value. I don't think too many people are dealing with the VIX like that, but yeah, I mean that's what the 6B stands for. That's what it represents, the outer edge of what would be considered fair value for the day, and we just kind of sat there consolidated as price continued to rocket up. However, it has not gotten rejected at 20 yet, and I'm just going to move forward, just kind of ignore the pivots. These are for the overnight session. You can saw that once we got down to that outer edge of what would be considered value, we started to consolidate. And if you'll give me a second, I'm going to go ahead and enter this trade as we are having that first 30-minute close below the 92 level. I'm going to put it in for 85 and see if we don't get the fill. Buy, please. Okay. So we'll see if that fills. Yeah, so we saw we're seeing that consolidation right at about 20 in the VIX. This is VIX futures, by the way. That's why the pricing is slightly different. And it's going to be really important to see, do we finally get that rejection, or do we once again, as we have during the entire course of this bear market, does the VIX start to go higher and price start to go lower? I still do think that the bear market ended on that October 13th date. So it's still, for the bulls, it remains all about the trend line. And really, we could go nowhere this week. And that's not going to change the assumption too much. We really need to see a significant sell off, I think, at least for me, to uh, be looking more to the bear side again. Um, but yeah, I just want to point out the 20, watch the futures. I think that's going to be most accurate for 0DTE. And we'll see what happens. Do we get the head and shoulder, inverse head and shoulders that we see on the weekly that I always show you, or does it fail? I think there's an analog for this in 2002. Uh, if anybody wants to look into that, a similar analog where we had that inverse head and shoulders look and we ultimately did sell off. But you can see for now, inverse head and shoulders is holding. Going to be just watching the supply zone and the levels that we mentioned earlier as it relates to that. And yeah, I think that covers the important price action for today. I did not get my fill, so I'm going to adjust pricing here just a little bit. And I'm going to give you some announcements and let you guys go. All right, there we go. Small little MES position that I will add 2 additional contracts at 7 o'clock if we are still below 92. And my stop on that is going to be about 4,011.25, which you can see on the, I'll go back to our macro chart real quick. That's going to be kind of the edge of the weekly pivots, 11.25. I don't want to be short below that. So nice and tight. Like I said, I think it's going to be a pretty tight week. Lots of contraction in the pivots. So that's kind of what we're looking at. Just one more time, I want to direct everyone to the description so they can follow along this warm-up document to get the most up-to-date information at 10:30 Eastern tomorrow once the open has concluded. The website retailtrain.com is up and running. I believe last I checked. I'm still enduring that move from review. Sorry, my headphone went off. I'm still going through that move from review to Substack. I do have the website up and running. The first new newsletter I do hope to put out this week as I finish figuring out the platform. So like I said, I'm hopeful that I'll get that to you this week. Until then, I will put these out every day, so you can look forward to these videos, and I will keep this document updated so that you're good to go intraday. And that's all I have for you today. So as always, please feel free to respond in the comment section of this video with any comments, questions, concerns, recommendations, critiques, etc. I'll engage with whatever you give me. And you can also follow me on Twitter at Routine Trader, and we can talk there as well. So if you enjoyed today's content, please do give it a like to help with YouTube's algorithm. That is the new little plug that I put in here. And with that, until tomorrow, stay classy.